Welcome back to Market on Close. I'm Marley Caden. Let's talk commodities right now with Scott Bauer, the CEO of Prosper Trading Academy. Now, Scott, thanks as always for being with us. Now, takeaways just on the day. I did notice something. We had a bearish double top pattern form on the Dow today. We don't talk a lot about the Dow, and we're in the green across the board. But, what does that signal for you?
I'm in the camp that you and Kevin were just talking about. A lot of people want to fade this, and I think that we can continue to grind higher if the data still comes in okay, and if really nothing derails what we saw on Friday with that jobs number. And we're seeing the 10-year and rates continue lower and continue lower. So that should be a spark for the upside in this marketplace unless something derails that.
All right, so speaking of lower, let's talk about oil prices. We got, I think, generally an expected announcement from OPEC Plus that they were going to ramp up production with another large output hike up by 547,000 barrels a day for September. That was mostly in line with market expectations, though, right?
It absolutely was, but yet, the market was maybe looking for a little surprise. Maybe some of the news over the weekend and earlier today with Russia and India on the oil front there, maybe that kept some people from really selling here. But yes, that is exactly what was expected here. And I think Goldman Sachs even thought that maybe there was going to be more, or there could be more. So I have been in the camp, and we've talked about it, Marley, recently, that I have been a sell the rip in oil, and I wouldn't say that oil's getting hammered today by any chance, but yes, on the output increase, we are seeing prices lower.
And you mentioned India. I know you're specifically talking about the president saying that he's going to substantially raise tariffs because India is buying a massive amount of Russian oil and then selling it on the open market. That's what he posted on Truth Social. Once we get more clarity on what that might look like, because there were no specifics given in the post, what do you expect to happen with prices?
I don't think that's really going to impact now. I mean, if anything, if there are some sanctions on Russia, we've kind of seen this before. And I hate to say, what we've seen in the past is going to happen again. But the president himself said the same thing just this morning, that Russia always seems to be able to wiggle themselves out of these sanctions. So I don't really think we're going to see much of an impact.
All right, so let's move on to the dollar then. The dollar is recovering modestly today. I would say that's fair to describe it after Friday.
Yeah, just a little bit, but there's still a lot of headwinds here. And we saw the dollar get up to almost 99. I think it was 98.80 maybe may have been the top, and it really just stalled, and we're seeing it back off of there again. So what we saw was a trio of events on Friday that really shows how fragile the dollar is right now. It was the dismal jobs report. It was the resignation of the Federal Reserve governor, and then also obviously the firing of the BLS officials. So those are all very negative. Yeah, the dollar hung in there a little bit today, but just like with oil, for the current state of where we are right now, I think the dollar is a sell.
And it's interesting, too, as we're now a few days into August, only 2 trading days, but the dollar was up 3.4% in July. It was its biggest monthly gain since April of 2022. What are your expectations for August?
It was so oversold from a technical standpoint, from a fundamental standpoint, from the RSI. It was really oversold. Now, the market all of a sudden now has shifted. Last week, we were maybe 50-50 on that rate cut for September, and now we're over 80%. So that's reflected here. And as long as the data comes in over the next several weeks, kind of midline here, and there's not a lot of strength that we're seeing in the economy, then my guess is rates can continue to come down here. And as the bets of imminent Fed rate cuts, not just September, but maybe going out further as well, I think that's going to be tough for the dollar.
All right, let's close out on Bitcoin. I'm looking right now, trading just above 115,000. Certainly better than on Saturday when it was about 112,000, but it's really stuck in this range. It was on such a tear, and then it pulled back a bit, and it just can't seem to get out. What's it going to take?
that's the pattern for Bitcoin, right? We see sometimes a violent move and then this consolidation for a period of time. And here we are again. But I think the bulls have to be pretty happy because with the news that came out over the weekend, and this was on top of everything on Friday, the news that came out over the weekend with China and other things unsettling the crypto marketplace, we did see that quick dip back down to 112, and here we are. So I think the bulls have to be pretty happy with that. And again, if we start to continue to see this data that really lends itself to the Fed cutting in September, maybe in October, but then again in December, I think that's bullish for Bitcoin.
Well, Scott, we appreciate you being with us today to break all of that down. Always love talking commodities with you. That's Scott Bauer from Prosper Trading Academy.